Greetings, everyone. Lately, I've been receiving questions about how I would go about managing a trade after it's open. So I thought I'd make a video out of an article that I wrote a while back entitled Trailing Stops and Multiple Lots. And personally, this is one of my favorite ways to deal with a trade as it progresses in the desired direction. First, let's take a quick look at the disclaimers. Trading foreign exchange involves significant levels of risk, may not be suitable for everyone. You should only be trading with risk capital, and that is money that you can afford to lose. High degree of leverage in this market can work against you as well as for you, and the content provided is for informational and educational purposes only. All right. Now, as I mentioned, this video is going to describe two slightly more advanced trading techniques: how to trail a stop and how to maximize profits by trading multiple lots. Now, let's cover multiple lots first. And since as traders, we always want to maximize risk as much as possible, I offer the following cautionary note. Remember, each time a trader adds an additional lot to a trade, you're taking on more risk. It may still be only one trade, but the size of the trade obviously plays a part. Now, for example, if a trader opens a single trade with a 100 pip stop, they take on 100 pips of risk. Now, if they open that exact same trade, but with three positions, they are now taking on 300 pips of risk. They're tripling their risk. Now, it's imperative to be sure that the size of your account can handle this additional risk. Now, here's a quick way to make that determination. A trader should never place more than 5% of their trading account at risk at any one time. And that means at any one time, that means if you have one position open, you've got 5 positions open, you've got 10 positions open. If all those trades go against you, you're not going to lose more than 5% of your trading account. So for example, if we're trading a 10K lot, 1 pip, depending on the pair being traded, is worth roughly $1. So a 300 pip stop would equate to about $300 worth of risk. Now, if we divide $300 by 0.05, or 5%, we'll get $6,000. That means unless you have a $6,000 account, you should not be taking on $300 worth of risk. Now, possibly the trade can still be taken, but with some adjustments to the size of the trade or to the size of the account. Now, either the size of the trade can be made smaller or the size of the account can be increased. Okay, now moving on to implementing our strategy of trade management here, you've been looking at a historical chart, a historical one-hour chart here of the pound New Zealand currency pair. Now, with this chart, we want to take a look at this chart and see how we can employ our trailing stops and multiple lots strategy. Here's how we're going to trail the stop. Since the pair is in a downtrend, and you can see some of the other videos to determine about how to decide whether a pair is in a downtrend or an uptrend. But since the pair is in a downtrend, we only would enter the trade by selling short. We only want to go short with a pair that's in a downtrend. And since the price has broken through support, triggering our entry, the stop would be placed above stop 1 level. So for example, right here on the chart, we see how the pair moved up. This is a 200 period simple moving average right here. It oscillated around this 200 period moving average, and then it broke through. See, it moved down here, made a new low, traded up, and then comes back down again, the direction we want to trade the pair in the downtrend. This is the previous low. So once price action takes out that low, right there where the green line is, we're in the trade, and our stop is going to go above the previous high, which is right there where it says stop 1. And we're going to do that with 3 positions. So as price continues to move in our favor and breaks below the second green level of support, we would close one of our 3 positions and move the stop to stop level 2. Okay, so here's where we entered. Here's where our first stop was. Pair moves down nicely, starts to consolidate right in here, puts in a low, consolidates some more, and then takes out the new low right there. So at that point, at that green line right there, we manually close one of our positions, and we would, on that one position, we would gain 110 pips. We'd close that out and we'd move our stop manually from stop level 1 to stop level 2, right there. So by doing that, as I mentioned, we've locked in roughly 110 pips of profit. We've also placed our stop above a new resistance level so that our 2 open positions are protected. Closed one, we still have 2 open. Now, moreover, since that stop is now below our first entry point, if the pair retraced and hit our stop, we'd show a small profit on the remaining 2 open positions, plus the 110 pips we gained before closing the first position. So at this point, we've removed all risk from this trade because we entered the trade right there originally, and now we've got our stop right here. Our stop in the downtrend is below our entry. So if price moves back up and hits that, we're stopped out at that point with a slight profit. Now, as price continues to move in our favor, as it does nicely on this particular trade, it's making lower highs, lower lows, and when it moves below our next green support level, we close out one more position, locking in a gain this time of about 310 pips on that particular position, and we'd move our stop to stop level 3. So in this situation, here's where we closed out the first position. Price moves down very nicely here, puts in a new low, oscillates around, and then takes out the old low right here. So at this point, we close out our second position for plus 310 pips of profit on position number 2, and add that to the 110 pips we got on position number 1. And in this case, we remove our stop from stop 2 down to stop level 3. So this is the way, trailing our stop manually, and by using multiple lots, we can close out, we can scale out of the trade. Now, on the last position that's open, we're simply going to continue to trail the stop using the same method as above. And when price no longer continues to make lower highs and lower lows, we'll be stopped out at some point as the pair retraces. So as price moves through the next green support level, we would advance our stop to stop 4. Okay, so price moves down again, puts in a low, oscillates, consolidates, takes out that low right there at this point. And at that point, we don't close out the lot because it could go on for a long period of time. We don't know. All we're going to do is move our stop from position 3, move it down to stop 4 in that situation. So we can see that price, as we look at the chart, did not continue to move lower. Nothing's going to drop forever. Nothing's going to go up forever. It starts to move back up. We've got our stop at stop level 4. So our last position, our third position, gets stopped out right here. And on that third position, we gain 320 pips on that last 10K lot. So overall, the total gain on the 3 lots was 740 pips. Now, had a single lot been placed on the trade, the gain would have been 320 pips. So don't get me wrong, 320 pips, nothing to sneeze at all. I take that every day of the week. But given the choice, I'll opt for the 740. So from these examples, the potential benefits of manually trailing one stop and trading multiple lots, in my opinion, is quite apparent. So as always, when trying anything for the first time, be sure to test the concept out in a demo account numerous times until you completely understand the process. Now, even though it doesn't show it on this chart, obviously, if we were doing it in an uptrend instead of a downtrend, we do it the exact same way. The process would just be reversed. So as I mentioned, this is a little more advanced type of situation. So if this generates any questions in your mind as to how to do this, please feel free to email me at RKrivoFX@gmail.com, and I definitely look forward to hearing from you. So thanks for listening to this, and look forward to presenting something to you and having you watch it in the near future.